Manpreet Gill, the CIO of Africa, Middle East and Europe of Stancy, is joining us this morning. Manpreet, thanks so much for taking the time. Brave new world, you can call it. And amidst that, I think a lot of people looking to have conversations with India. What did you make of the announcement of the FTA? What are the implications? And do you expect that more such deals will come through?
Good morning. Indeed, brave new world. I think since November, I think trade has been sort of the top of everybody's agenda. Look, I think there are two ways to look at some of the recent trade deals. You could argue that the UK-India FTA, for example, has been in the works for some time. But I think what's really giving these trade deals more impetus is just the environment we're in, given what's changed, from a U.S. policy perspective. So I think implications are, look, trade deals are a positive, right? I think it's hard to argue against that. But I think why they look interesting at this particular point in time is that when I take a financial market view, there's obviously been a lot of doom and gloom driven primarily by worries about just how much of a hit economic growth in India, in the US and elsewhere, how much of a hit to growth we'll take from the tariffs that have come through. So the more policies that are able to sort of offset that, lean against that, the better we're likely to be. So in that sense, I think FTAs are likely to be well received, but just how many more there are, what sort of form they take, there's likely to be a lot of focus on that. And I think particularly what sort of deal is likely to come through in the US and how the US sort of forms trade deals with key trading partners. I think that's really the key focus from a market perspective.
Manpreet, that's an interesting point to make, but let's talk about the domestic market as well in terms of what's happening. The FTA, yes, a positive. There are some concerns with regards to US trade tariffs. You're talking about the geopolitical situation in the country as well. And with all of this said and done, you have valuations to some extent which are compelling. Which side of the boat would you advise an investor to go? Time to hold back or time to start deploying?
I think when it comes to Indian markets particularly, I think we're more in the camp to use these opportunities to start deploying within reason, right? We're big fans of diversified portfolios, and that diversification, of course, is more important than it's ever been in this environment. But within that context, to your point, right, yes, there are always a lot of things out there to worry about, and we're in an environment where we need to keep a close watch on trade deals, geopolitical risks to ensure none of them worsen to the point where it would be prudent to change views. But having said that, and having said that, there are always risks to keep in mind. The other key element, which you brought up very well, is what's in the price. And the fact that we've seen in Indian equities, perhaps more so than elsewhere, the pullback started much sooner, well before April. And that's left Indian markets in arguably a much better position from a valuation standpoint in terms of pricing and some of that slowdown, some of the risks. So that's why we'd rather be a buyer than a seller when you take a domestic investor's perspective. And even from a global investor's perspective, one of our views has been there's been a huge focus on US equities alone in recent years. We think we're in an environment where it makes sense to diversify to Europe, to Asian markets, including India. So those to us are the positives. It's not about ignoring the risks. I think we still need a close watch on them. But on balance, we just think we'd rather be buyers than sellers.
That you're saying that because that sort of builds into the narrative that we've heard over the last few weeks from international investors as well about moving away from Wall Street and looking for opportunities around the globe, and specifically talking about India. Manpreet, how closely are you watching the currency scenario play out, and how much of a bearing will that have in the way that you deploy funds in the near to medium term?
Well, I'm so glad you brought it up, because I've often been one of those advocates of following currency markets and arguing we don't follow currency markets enough as equity or bond investors. I think the big picture context and why we think is important is the dollar is quite a big driver of flows into emerging equity markets, including India, right? And obviously, since 2021, 22, the dollar's been holding quite strong, and that, if anything, has been a headwind. But if we are starting to see that getting chipped away to some degree for a variety of reasons, that on its own is a positive for emerging assets. We initially saw a bout of dollar weakness against the majors. I think what we've really seen in recent days is some dollar weakness start to emerge against major Asian currencies. Look, this is just a week, but I think in the bigger context, if that has one roadblock or headwind to foreign investor flows into EMs like India, some dollar softness, even if it's just softness, not necessarily a big downtrend, can be an additional positive, an additional tailwind, which feeds into our view that it's no longer about a U.S. equity-led view alone. It's about having equity exposure that's spread across regions, including in Indian equities.
Okay. You mentioned bonds as well, and I'm just wondering whether there are opportunities that you're spotting, and I will keep this short because most of my viewers are, in fact, interested in equities. So, quick answer here. Do you see opportunities in India bonds?
We do. And I think even for equity investors, having some diversification into bonds and gold is reasonable. We've always been of that view, right? And the opportunity today is that, an environment where we've been worrying about, moderately a slower growth, more risky environment, that's where bonds can play a key role in an equity portfolio, not only in terms of the returns on their own, but also helping buffer the overall volatility. An allocation to bonds and allocation to gold is what almost allows you to take a little bit more risk without having to increase the volatility to the whole portfolio quite a bit. So yes, we still think it's a good time to hold some bonds, particularly when the RBI is biased towards cutting rates. That's always a tailwind.
So the only reason that I kept that short because the tax treatment on bonds is not the most favorable for the Indian investor currently, and so therefore it doesn't make sense if you're paying that much tax on it, right? So, but speaking about equity and to drive home the point that you were making, and there are opportunities, could you distill that for us and tell us, because if you're talking about the move over the last month and a half, Manpreet, the catch-up that has taken place in the Indian equity markets has been pretty red hot. And so from that perspective, a lot of the opportunities that might have been visible even a month and a half back have evaporated very, very quickly. And so if anything, the argument is that we're neutral in terms of valuations as things stand right now. We're not too expensive, we're not too cheap. So where are you seeing pockets of opportunity?
I think there are a couple of different perspectives I'd bring there, right? I think one is, look, looking at the nominal price, yes, it's easy to say, look, if we're back where we were at the start of April, is that a good thing or a bad thing? I'd argue the price level does not tell you as much as, look back into fundamentals does. Because yes, the prices have rebounded, but it's the valuation number, the fact that we're not back to elevated valuations, that to me gives me a little bit more comfort. Because let's not forget, the whole debate was, when have markets sort of priced in, growth sort of moving to a positive but somewhat lower level than where we were last year? And you could argue that process has already occurred. The other one, of course, is, look, we do need to think in terms of scenarios, right? Because, and that's not India specific, but at a global level, if I look at the US scenario for a moment, our base case is still that we start to get trade deals, we start to get growth stabilized, and that's of course good for equity markets. But there is obviously that concern about what if this growth slowdown extends further than we'd like. Those kind of factors do have some sort of drag on onshore markets. I think one way we're trying to address that is through our sector calls, because one rotation we've made, and this is mainly a top-down call, is we sort of closed our preference for infotech in onshore Indian equities and replace that with healthcare. That's arguably a more defensive approach. We're trying to reduce exposure to trade-sensitive, US growth-sensitive sectors and raise more exposure to a relatively more defensive sector. But that's perhaps an example of saying, look, we would like to stay invested for a continued equity rebound, especially when valuations still don't look like a hindrance. But how do we build a little bit more balance into that, a little bit more caution? I think that's the way we are addressing it from an investor perspective.
So Manpreet, taking into consideration the India-UK FTA, how positive would you be in terms of the auto and the auto ancillary space, taking into consideration the opportunities that do like, I know you can't talk stock specific, but do like for the likes of a Tata Motors or a M&M, which in a way for the Indian players like a Maruti and a Hyundai are slightly on the back footing with the kind of cheap imports that could come in, right? So your sectoral perspective, would you bet on auto as well as auto anch?
Look, I think there's an absolute and a relative angle here, right? Because, no disagreement with what you said. If you take a sector perspective, is the FTA likely a positive catalyst? Most likely, yes. But I think when we think about our own sector perspectives, we're trying to almost identify top down where we like to get the best relative performance. So looking beyond just the FTA itself, because one is the sectoral specific impact of the FTA, but what we're focused on also is the bigger picture macro implication of the fact we've got one FTA and the likelihood that maybe there are more in the pipeline, and particularly keeping an eye on any deal with the US. Our sector preferences from a ranking perspective, we'll still put consumer discretionary more broadly. I think that feeds more to domestic growth. That looks interesting as an international investor. And financials, which we think is a more unique story. And like I said, third is sort of looking at healthcare for adding that defensive tilt. I think in terms of relative preferences to the way, or rank ordering the way we look at it, those would still be the three areas we focus.
Manpreet, what's your reason for being positive in terms of consumption? Reason being is there is pressure in terms of consumption right now, in spite of whatever is being announced in terms of the budget, the income that comes into the hands of the people. Urban recovery is something which is not happening. Rural is picking up. So what is your thought process behind consumption as a bet?
So I think it's really sort of trying to balance what the current news flow and what recent data tells us, and trying to balance that with what we think is in the price and the forward-looking path from here. Because without disagreeing with anything you said, I suppose the two offsetting factors we balance that with is one, how much of that is now well known and possibly in the price, and second is which direction are policy catalysts going. So yes, we had obviously the budgetary support, that's from the fiscal side, and increasingly so more room to provide support from the monetary side as well. So when you balance those factors up, you sort of say, look, would you rather be a buyer rather than a seller? I guess it comes to the same question.
Well, point taken. Manpreet, thanks so much for joining us this morning. Fascinating insights, and thanks so much for taking the time.